welcome back. We're going over time and price. Now, time and price, it's a really, I guess you can say, good thing to understand in the back of your head. It's not it's a concept, but it's not really a confluence, okay? Well, it is if you just know how to understand it, okay? And you understand it well. Time and price is basically understanding that before price moves, time has to be there first, okay? Because for example, right, whenever you're waking up to trade, right? If you do wake up before the session, for example, let's say you're waking up before New York. What are you waiting for? You're waiting for New York, okay? You're waiting for a New York session so price can move, okay? It is very, very, very simple. If you wake up before Asian, what are you waiting for? You're waiting for Asian because that's a time and price that price moves, okay? Because if you notice in that little sentence I said there's a time in price for price to move, okay? And right there in that sentence, I literally just said time comes before price, okay? There's a time in price that price moves, okay? Time comes before price, okay? It can be anything. In time, there's multiple forms of time. The main thing is ICT kill zones, okay? You have Asian, London, and you got New York. As we see here, Asian, London, and New York, okay? Those are points of time, okay? And then what else do you have? You have macros. You remember that? You have macros. Those are also points of time. See, if we look, got a macro right here. See that? 850 to about, let's see if I can get it, 850 all the way to 910. That's your macro right there. If you want to pull all the way up, sure. This right here is your macro right there. That's also a point of time, okay? So whenever price is waiting, or if price is consolidating, or if you are waiting for something, you have to wait for time before price. It's always time, okay? And it can also be specific points in time too. It can be London close, it can be the 9:30 opening, it can be the 10 a.m. opening, because I think 10 a.m. is a new 4-hour candle. I'll check for myself. I always wondered why 10 o'clock was so important. No, it's not a new 4-hour candle. It's not. But it can be very specific times. Like it can be 8:30, which is most likely news event time, like non-farm payrolls or PCE index. It's always dealing with time before anything. Okay, it's time before anything. Okay, because if you go to Discord chats, if you go to Telegram channels, they're waiting for some sort of time. Okay, even when you're predicting economic events, you're waiting for what? The 8:30 opening bell, or you're waiting for 10 o'clock a.m. or you're waiting for the 9:30 opening bell for the stock exchange. You're waiting for something, okay? And it can even be long-term examples too, if you like using long-term confluences, like quarterly shifts, seasonal tendencies. What else? I'm sure there's more out there that I forgot. But anything that's dealing with time is always first. So it's time, then price. Because if we look, before Asian begins, right? Price is kind of moving slow. See that? It's moving, but right before Asian kicks in, it's moving slow. And then when Asian kicks in, it's like, and we just dump. Okay? Asian kicks in, we dump. Price isn't moving as fast before London, but as soon as London kicks in, right back up. See that? Price isn't moving as fast before New York. New York kicks in, bang, look at that. And we're in New York right now because it's 9:42. 9:30 opening bell was just a couple minutes ago. But if you just look at that candle, you can see how price is moving fast. If you just jumps at 1 minute, you can see how price is moving fast, even in hindsight. Okay, I just saw this live before beginning this recording session, but time is before price. Okay, it can be anything. Let's type out some examples. It can be macros. It can be, I don't know. Let's see, quarterly shifts. How do you spell quarterly? If I can spell quarterly shifts, it can be seasonal tendencies. I don't know. It can be ICT kill zones. It doesn't matter. Anything that's time, and as you can see, prices even spooling higher. Is there a macro? Or there's about to be a macro, but it can be macros, quarterly shifts, seasonal tendencies, and ICT kill zones. And I think there's even more than that. Honestly, I think there's way more than that. There's even specific openings too. Like it can be 9:30 opening, 10 o'clock opening. It can be 8:30 opening. It can be It can be really anything that's dealing with time. I don't need to get into the specifics, but okay. But we're gonna go over some examples of how time affects price. Okay. So for example, we're gonna go to this macro that formed right along here. Okay, we're just gonna go over some examples and taking some hindsight trades, I guess you can say. So here on the 1 minute, right, we're looking to trade this macro here, the 850 from the 9-cent macro. That's the macro we're looking to trade right there, in that range there. So looking previously, okay, if we jump to our higher time frames, we can see that price rebalanced to some fair value gap. Not just some or any fair value gap, this fair value gap. It rebalanced to it and started respecting it. If we throw our quadrants on there, you can see how price respects the upper quadrant of this fair value gap. So that's a confluence already. Okay, we're respecting that. All right. And then we have an order block right here. These last two candles. That's your order block. So if you know that, you can say, I guess you can just say right along here, that's your order block. Right along there. So if we jump up to the lower time frame, we come to another fair value gap right here. We respect the consequent encroachment. Yeah, we respect the consequent encroachment, and we push higher, okay? Right there's when we push higher. We have relative equal highs here. New York kicks in, bang, do the highs, okay? And we have a market structure shift here. But does price want to retrace? Probably not. It probably doesn't want to retrace, but we can go on 1 minute. Since we know price is going higher, we don't have to trade before the macro because we're looking to trade that first macro of the New York session. So if we go here and we know price is going higher, you can take a fair value gap, a mitigation block, a rejection block, doesn't matter, okay? Because here's one example. You have this fair value gap here. But is that within the macro? No, but it's okay though. It's okay. You can place the trade before the macro and then wait for the macro to just continue the move. I said that in the macro video if you watched it. So that's one form of an entry you could have took. Another fair value gap you could have took right there. If you look, it's an institution order flow entry drill. I don't even think I need to draw it for you to see it. If you bang and bang, yep, I don't even need to draw it. It's right there. It's obvious. Okay. Then this mitigation block was here too. But did price come to it? No, it didn't. Didn't come to it. Mitigation blocks are super strong too, from what I've been saying. They are extremely strong blocks, and many people don't really know about them, to be honest, because it's basically like the last. Okay, it's a swing, right? But it's basically the last bullish candle for a swing. Okay, but that swing, if it doesn't break a previous swing, that's what makes it a mitigation block. But if it breaks a previous swing, that'll be a breaker block. Okay, but a breaker and mitigation are two totally different things. Okay, two totally different things. And I hope my mic isn't too loud because my own settings it says it's at 90%, but hopefully it's not too loud because the red bar keeps spiking through it. Hopefully it's not too loud. I'll adjust the volume after this video. But going over to London session, right? The London kill zone. All right, let's do our higher time frame analysis for this London session here. All right, so during Asian, right, what we did is we came into these lows here. Bang, bang, and bang. Okay. Lows smash. We come into this one? No, we didn't. Well, close to it. Jesus. Came really close to it. But all these lows here, smash. Okay, sell side liquidity, it's been smashed through, okay? We, pushed higher. Did we have a market structure shift? No. We didn't. We did. Right along here, but did price ever come back down to this fair value gap? It didn't. We do have this order block here. Price comes up, respects the order block, pushes higher, okay? We're waiting for London. We are waiting for London, right? London kicks in. First thing we do during the macro is we seek liquidity. Liquidity where? Here. Right along here. This is a liquidity pool, okay? Whenever you see a bunch of candles like this just bunched up, that's a liquidity pool. That's your liquidity pool right there. If I can make that a little better, let's see. There you go. That's way better. So during that macro, we seek for liquidity. Bang, down there, okay? So now, since we see that, we could be looking for, some sort of entry since we saw that. You have about three things here. You have about three. three things, okay? You have first this breaker. You have this breaker. Then you have this fair value gap you could have took. Okay. Just keep these things in mind. You have this fair value gap, right? You have that breaker. You have that mitigation. Then there's a bunch of other things too. There's this rejection block you could have took also. Right there, if price came back down into it, that's your rejection block. And the price did is like boing, it really barely tapped into it. But you can see it right there. Boing, and then it pushed higher. Okay. But honestly, that could have been your turtle soup right there. If we jump to like the 1 minute, if we jump to like probably the 1 minute, right? That is a good turtle soup because, like I said, the liquidity pools use other confluences can be very, very, very good turtle soups. And here, I'm gonna show you the difference between a mitigation block. Okay, you see, pay attention to these two swings. Okay, I'll just lecture you real quick. These two swings right here, or I'll just carry this up so you can see it. But those two swings there, you see how this swing here doesn't get broken? This one down here doesn't get broken. Okay. This one tries to break it, but it doesn't. Okay. That's why it's not broken, because this one doesn't try to break it. If it did break it, right, this entire candle here would be a breaker block, okay? If this second swing broke a previous swing, this candle would be a breaker block. But since it didn't, this candle is now a mitigation block. But it's not the candle now, okay? It's the body of the candle, okay? It is the mitigation block, right? It's a failure swing or a swing that doesn't, break a previous swing, but that last up close candle before the swing, the body of that candle, right, or the closing of that candle is your mitigation block. Okay, so the closing of the last bullish candle or the last up close candle is right there, and that's your turtle soup entry right there. There's your mitigation block. Okay, so I just gave you a refined definition of what a mitigation block was. Hopefully you got that and caught onto it pretty fast. But there's your mitigation block. Because if you see, price came up, came into it, closed above it, respected it. We have one more final reclamation of this mitigation block, then we finally push higher. And that's your turtle soup right there. That is your turtle soup entry, boy. So if we, I guess you can say a long position, right along here, you have your stop at the swing. I guess you can say have your stop at the swing if you're using mitigation block. And where are you targeting? I guess you can be targeting Asian highs. Well, no, Asian highs are practically got smashed after that. But you can take this primary buy side liquidity here, or this low resistance right here. You see these two highs? That low resistance liquidity. So that would be a pretty good trade. This point of liquidity, or this all the way over here. So this would be 2 points of buy side. Okay, and now I think we can turn off the sessions. There you go. Buy side. There we go. Buy side again. Now let's drag that entry or that take profit all the way up there. Bang. Oh my god, 8 risk to reward. That's so unrealistic. No, it isn't. 8 risk to reward, come on. Quit fooling yourself, man. You can do this. 8 risk to reward? I mean, yeah, that's something. I'm not going to say it's nothing, but bro, that's easy. It's easy to do when you know what you're doing. It's easy. Come on. Don't say, oh, 8 risk to reward. I can't do that. Oh, yes, you can. I'm like, oh, yes, you can. You can do that. This is easy. I'm not going to say it's nothing because it truly is something to get an 8 risk to reward off of turtle soup. It is. Because some people even get 2 or 3 risk to rewards off turtle soup. But 8, yeah, come on. That's good. But moving on to Asian session now. All right. So let's do our, top-down analysis. Top-down analysis will really be jumping onto the daily. But just to make this video quick, just staying on the 15-minute. All right. So during Asian, right, we came into this order block and this fair value gap here. So this is a change in state of delivery and a market structure shift from right here. We come into it, respect it. Want to throw the quadrants on there, sure. Bang. So we respect the upper quadrant. We in the lower quadrant. This bearish fair value gap. So that's already your confluence there. And even looking before then, right? If we just turn off the sessions, you can see how before Asian came and took out these highs, and then we had a bearish market structure shift. So that's even more of a confluence, okay? Then we came into this rejection block over here. Right along there. There's your rejection block. Hopefully I made a rejection block. Yep, I did. Bro, I love my tools. I revamped them and I'm literally loving them so much. Holy crap. I'm enjoying this so much. To just look at the tools and use them, so amazing. But turning on the Asian kill zone again, if I can even use my mouse correctly, Jesus Christ. But looking here, alright, I think there's a market structure shift right around here. If we jump up to the 1 minute, price is just making this way harder for me. By saying, oh, you need to go to this time frame, oh, you need to go to this time frame, oh, you need to go to this time frame, blah, blah, blah. Anyways, looking back, right, we have a order block here, these last two candles. So that could have been an entry, or you could have took this immediate rebalance right there. Took that immediate rebalance. Did I make one for this? Oh, yes, I did. Immediate rebalance. That looks so cool. Look at that. The nice purple. Like that. But that could have been your entry right there, that immediate rebalance. Boing, and then that's where you sell. When it rebalances that fair value gap that was going to be created, that's your entry, okay? I don't need to teach immediate rebalances now. I'll only taught you mitigation blocks, but that immediate rebalance is your entry, okay? Let's say you took that, okay? Taking a sell right along there, and your stop is about at this high here, maybe? Yeah, probably around there. And then your target will probably be this low here. That low right around there. Probably will take a while because this is Asian session, obviously. An Asian session is pretty slow. But bang, there's your trade. There's your trade right there. What is that? 4.5 first to reward? Yeah, that's 4.5 first to reward. Now, I would go over quarterly shifts and seasonal tendencies, but I've been trying to learn that for the past couple months, and I still can't catch it. I'm going to reteach quarterly shifts, seasonal tendencies, and one-shot, one-kill, because those are the hardest concepts to learn, and IFTA data ranges. I'll be teaching those soon. But, I hope you enjoyed this video. I hope I went over time and price really well, honestly. But, if you enjoyed, just smash that like button, and I'll see you on the next one. Peace.